If you wanted to take over the world in the 19th century, you needed an army. In the 20th century, you needed a central bank. But in the 21st century, power has evolved into something far more discreet. You don't need soldiers or printing presses anymore. You need a ledger that tracks every cent, every asset, and every risk on the planet. There is a company that sits at the center of this ledger. It doesn't make cars, it doesn't drill for oil, and it doesn't have a retail bank on your street corner. Yet, it owns a piece of almost everything you touch, from the phone in your pocket to the fuel in your car, from the medicine in your cabinet to the house next door. This company manages over $10 trillion in assets. To put that in perspective, that is more than the combined GDP of Japan and Germany. It is an amount of money so vast that the human brain isn't even wired to comprehend it. The company is BlackRock. And for a long time, they were the most powerful entity you had never heard of. Welcome to Wealth Records. Today, we are pulling back the veil on what many call the fourth branch of government. We aren't just looking at a hedge fund or an investment firm. We are looking at the evolution of power itself. We are exploring how a single firm founded in 1988 by 8 people in a single room became the silent architect of the global economy. To understand BlackRock, you have to understand the man who built it, Larry Fink. But this is not a typical story of a charismatic Silicon Valley visionary or a swashbuckling Wall Street titan. Larry Fink's power comes from something much colder and more calculated: risk management. In the mid-1980s, Fink was a star at the investment bank First Boston. He was a pioneer in the market for mortgage-backed securities, the very instruments that would eventually play a role in crashing the world economy decades later. But in 1986, Fink made a massive mistake. He miscalculated a shift in interest rates and lost his firm $100 million. In the high-stakes world of Wall Street, he was radioactive. He was fired, but he didn't leave with his tail between his legs. He left with an obsession. He realized that the financial world was becoming too complex for human brains to track. He realized that the winners of the future wouldn't be the ones with the most gut instinct, but the ones with the best data. In 1988, he co-founded BlackRock with a singular focus: building a machine that could see the risks no one else could. That machine was named Aladdin. Aladdin stands for Asset, Liability, Debt, and Derivative Investment Network. It began as a stack of computers squeezed between a refrigerator and a coffee machine. Today, it is the nervous system of global finance. Aladdin doesn't just manage BlackRock's $10 trillion. It provides the analytical God view for other banks, insurance companies, and even sovereign wealth funds. It is estimated that Aladdin monitors and influences over $21 trillion in assets worldwide. That is roughly 10% of all the wealth on Earth. Imagine a software program that knows the exact ripple effect of a port strike in Shanghai on the price of orange juice in Florida. A program that calculates how a political coup in West Africa will affect the pension funds of teachers in Ohio. When everyone else is guessing, BlackRock is calculating. This information advantage turned BlackRock from a small startup into a giant, but it also turned them into something the world had never seen before: a passive powerhouse. For decades, the stock market was a battlefield of active pickers, people trying to outsmart each other. But BlackRock led the revolution of passive investing through their iShares ETFs. They told the world, don't try to beat the market, just own the market. Millions of people listened. Every time you put money into a 401k or a retirement fund, there's a high statistical probability that your money flows through the pipes of BlackRock. This created a strange new reality. Because BlackRock manages so much passive money, they're forced to buy shares in almost every company in the S&P 500. Today, BlackRock is a top 3 shareholder in nearly every major American corporation. Think about the implications of that. In the old days of capitalism, Ford competed with GM. Coke competed with Pepsi. They fought for market share, which kept prices lower for you. But what happens when the same entity, BlackRock, is a lead owner of both? What happens when the competitors are actually working for the same landlord? This is what economists call common ownership. It doesn't look like a monopoly because there are thousands of different company names, but when you follow the trail of ownership back to the top, the lines all converge at 50 Hudson Yards in New York City. However, BlackRock's true ascent to the shadow government didn't happen in corporate boardrooms. It happened in Washington, D.C. during moments of absolute crisis. In 2008, when the global financial system was melting down, the U.S. government was in a state of blind panic. The Treasury and the Federal Reserve realized they didn't have the tools to understand the toxic assets sitting on the balance sheets of crumbling giants like Bear Stearns and AIG. They needed a map of the minefield. There was only one firm with the software capable of reading that map: BlackRock. The government didn't just ask for advice, they hired BlackRock to manage the cleanup. BlackRock was given the contracts to manage the assets of the very banks they competed with. They became the emergency doctor for Wall Street. This gave Larry Fink a seat at the table that no other CEO had. He became the man the Treasury called on speed dial. This relationship reached its peak in 2020. When the pandemic hit and markets froze, the Federal Reserve stepped in with a bazooka of liquidity. But the Fed is a regulator, not a trading desk. To execute their massive bailout of the corporate bond market, they once again turned to BlackRock. For the first time in history, a private company was essentially acting as a subcontractor for the Central Bank of the United States. The line between the state and the private firm didn't just blur, it vanished. But being the world's emergency doctor was only the beginning. As BlackRock became the owner of the world's assets, they realized they could do more than just manage risk. They could change how the world works. They could bypass the voting booth and use their trillions to force social change from the top down. In the second half of our story, we are going deep into the controversy that has turned BlackRock into a political target. We'll look at the ESG agenda, the great consolidation of the housing market, and the terrifying endgame of a world where you own nothing. But BlackRock manages it all. The story of the shadow government is about to get much darker. But being the world's emergency doctor was only the beginning. As BlackRock became the owner of the world's assets, they realized they could do more than just manage risk. They could change how the world works. They could bypass the voting booth and use their trillions to force social change from the top down. This brings us to the most controversial weapon in BlackRock's arsenal, ESG. Standing for environmental, social, and governance, ESG was marketed as a way to make capitalism more conscious. Larry Fink began writing annual letters to CEOs, essentially telling them that if they wanted BlackRock's capital, they had to prove they were green and socially responsible. On the surface, it sounds noble. Who wouldn't want cleaner air or fairer workplaces? But the backlash was immediate and fierce. Critics from the right argued that BlackRock was using other people as retirement money to push a woke political agenda that voters never asked for. Meanwhile, critics from the left accused the firm of greenwashing, claiming to be sustainable while still pouring billions into fossil fuel giants through their passive index funds. By 2024, the pressure became so intense that Larry Fink did something remarkable. He stopped using the term ESG entirely. He claimed the word had been weaponized. But don't let the name change fool you. While the label vanished, the mechanism of control remained. BlackRock shifted its language to energy pragmatism and infrastructure investment, but the core strategy stayed the same, using their massive shareholding power to dictate the long-term strategy of every company they own. If you are the lead shareholder in both Exxon and Chevron, you don't need to lobby the government for climate policy. You simply tell the boards of those companies what the new rules are. This is the power of the universal owner. They have become a private regulator that operates above the level of national governments. Then there is the issue that hits closest to home, the great consolidation of the housing market. For years, a viral narrative has claimed that BlackRock is buying up every single family home in America, outbidding families and turning us into a nation of permanent renters. The reality is more nuanced, but no less significant. While BlackRock itself often denies buying individual houses, frequently pointing the finger at their former partner Blackstone, the firm is a massive player in the mortgage-backed securities market and the financing of build-to-rent communities. They are providing the capital that fuels the institutionalization of the roof over your head. Imagine a world where the middle class no longer builds equity through homeownership because they are outmatched by institutional capital that never has to sleep, never has to die, and never has to pay off a 30-year mortgage. When an investment firm with $10 trillion enters the housing market, they aren't just looking for a home, they are looking for yield. And in a world of high inflation, your rent is their most reliable profit margin. This is the financialization of everything. It turns a basic human need, shelter, into a high-performance asset class for global investors. This leads us to the ultimate question. What is the endgame? We are moving toward what economists call a subscription society. A world where you don't own your car, you subscribe to a transport service, you don't own your music or movies, you stream them. And increasingly, you don't own your home, you rent it from a corporate entity. In this world, BlackRock is the ultimate service provider. They are the ones who manage the funds, provide the technology, and own the underlying assets. The Aladdin AI system we discussed earlier has now evolved into a generative AI powerhouse. It isn't just calculating risk anymore. It's helping financial advisors craft narratives to keep clients invested in this new system. It has become a self-reinforcing loop. The more the world becomes complex and volatile, the more the world needs Aladdin to make sense of it. The more the world needs Aladdin, the more power BlackRock accumulates. We are witnessing the birth of a new type of empire. It isn't an empire of territory, but an empire of the whole portfolio. It is a system where the lines between the corporation and the state have been permanently erased. Larry Fink once said that markets like totalitarianism because they provide stability. While he later walked back the comment, the actions of the firm speak louder than words. They seek a world of managed stability, A world where the messy, unpredictable nature of democracy is smoothed out by the cold, predictable calculations of an AI-driven ledger. So, who owns every nation? In the past, we looked to kings and presidents. Today, we have to look at the firms that manage the debt and own the assets. We have to look at the entities that have become too big to fail and too big to ignore. BlackRock isn't just a company. It is the infrastructure of the modern age. It is the silent landlord of the 21st century. As we look toward the future, the challenge for us isn't just about understanding the economy, it's about reclaiming it. It's about realizing that the $10 trillion BlackRock manages is, at the end of the day, our money. It's the pension of the teacher, the savings of the factory worker, and the 401k of the office clerk. The power they wield is a power we have lent them. The ledger is open. The data is clear. Now that you know who really runs the economy, you can never look at a market update the same way again. This has been Wealth Records. Thank you for watching.